Well, I've been sitting here all day, I've been sitting in this waiting room, and I've been waiting on my friends, yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are, yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone, yes, I'm holding on the line. Hey! I don't know where they are, I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst. Now, this young man did not hang up the telephone, and you guess what happened? Yeah, that call began. That call started.
So stay on hold. You gotta stay on hold. Don't go away. Well, I've been sitting here all day, I've been sitting in this waiting room, and I've been waiting on my friends, yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are, yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone, yes, I'm holding on the line. Hey! I don't know where they are, I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day.
Okay, stop me if this sounds like you. You check rates every day. 1 minute they're up, next minute they're down. The biggest dilemma you have, or the biggest financial dilemma you have right now, if you're a homeowner or if you're looking to buy, is do I buy now? Do I lock in? What do I do? So that's what we're going to talk about in today's video, folks. So this video is for people who are looking to buy homes and people that are homeowners. And we're going to try to break down the news. But the first thing I want you guys to understand, my name is Dan Frio. I'm actually a mortgage loan officer. I'm licensed in all 50 states. If you're looking to refinance or buy a house, hopefully I can help you. I'll give you my information at the end of this. But let's get over to the first piece of the puzzle I need you guys to understand. Mortgage rates. Where are they? How do you track them? You track me every day, but hopefully you can understand how rates really work. But the first thing we need to understand is how do interest rates work? How do you even track them? Because if you look at rates each day, and then that's your goal, is to say, okay, where's the sweet spot there? I'm going to give you some tools if you're a homeowner that you can use. But you come up, and I usually use Mortgage News Daily, and there's a rate that pops up or whatever. What rate is that? Because if you're trying to figure out rates, here's a whole assortment of rates. I'm going to start posting these on a daily basis. But if you go to Yahoo Finance, it can even get confusing here. And what I keep telling people is be careful because these are ads. Okay, let me just prove it to you. Go to Yahoo Finance when we're done with this video and just scroll to the bottom. At the bottom section, there's all kind of stuff about mortgages, real estate, but let's just go through it. Here it is today. I'll just go down through it. So you're going to get down to this. Okay, the first one you're going to come is best low and no down payment lenders. Okay, who are they? What kind of, what is it? What am I getting? Oh, okay, mortgage. Okay. Oh, there's all these rates. That's not what I was looking for. I was looking for some help. So let's go back to the Yahoo Finance, and we're going to go down to the next one. Okay, best mortgage lenders if I'm a first-time homeowner. Okay, so give me a little bit of data. Oh, it's the same. Every one of these is just going to be an ad. Okay, so the first thing you need to understand is where rates are, where they're going to go, and what our expectations are. So in this video, I want you guys to make the decision. I'm going to give you all the tools that you need to try to figure out where these things are going to go and why. So here's what we look at in mortgage rates. So mortgage rates are going to change everywhere. They're ads. Okay, so the 30-year fix, I'm going to start posting these each day instead of Mortgage News Daily. The reason being is they're different. Okay, that's what you need to understand. So Mortgage News Daily today has the 30-year fixed rate at 6.3. Freddie Mac is the average rate this week is 6.23. Retail at bank rate, 6.28. Well, why wouldn't you just go to Freddie Mac? Why wouldn't you avoid anybody else? Because you don't really know what these rates consist of, and they go across the board. So the first thing is you have to understand, where rates, how do you get rates? Well, every person's rate is a little bit different. Okay, we're going to dig down into that a little bit deeper. We're also going to talk, what do you do if you're looking to buy next year? What's the housing market look like? So we're going to take a whole bunch of things today, and we're going to help try to explain to you guys, should you lock, should you float, and what the expectations are down the road, especially in Q1 of next year, and that's what we're going to get to. So the biggest pieces of the puzzle that we focus in on is what the Federal Reserve is going to do. Okay, so there's been a black hole for the last 40 days, but now the data is starting to come out. And I didn't think the Fed was going to cut rates at the next meeting, but based on the CME Fed Watch tool that we go over every day, and the Fed's going to meet in 7 days, it looks like they're going to cut rates. There's basically a 90% chance they're going to cut rates now. So I'm going to say they're not going to disappoint the markets, because if they do, you're going to see the markets go, fall on their ear that day. So that's what we're focusing in on, what the Federal Reserve's most likely to do at the next meeting. So the data that they look at is right through here. Okay, so the Federal Reserve, I know I say these on a lot of my videos, but the Federal Reserve, all they do is they were created for two things: to keep jobs at full employment and keeps the inflation rate in check. These are the things that they look at right through here, and they control that rate over there. That's the federal funds rate. Okay, so that's what the Federal Reserve looks at. This is basically what the other markets look like. And the reason why we focus in on this is because we actually have to pay attention to economic news on a daily basis. Now, here's an interesting story I have. I had a conversation with a builder this morning, and he was like, it was a great conversation. And the cool thing about it, he's like, dude, I watch your channel every day because you're just data driven. That's what I look at. And I'm like, yeah, that's basically probably why I suffer. I don't have 100, 200,000 subscribers, because I'm just data driven. I want you guys to get the data you figure out what you think the data is going to take us from here. I'm going to give you my thoughts. I've been doing this for a long time. There's no reason why I would want to steer you wrong, but I'm not going to give you my thoughts and the whys behind it. Every time I come in, I hopefully explain the whys to you. So we take daily information like this, and then each morning I come out and explain, what's most likely going to happen with interest rates, not what you're looking for, but what's most likely going to happen. Okay, so the rest of this week, we're going to have a slew of information that the Federal Reserve really looks at and monitors. And I'm going to do that at the closing bell because we have a lot of information that came in today. Well, not a lot, but a little bit. But between the next 2 or 3 days, there's a slew of information that's going to really come in and make rates really volatile. So let's get over to this piece of the puzzle. This is what we follow when we're trying to track interest rates and mortgage rates. Okay, we track right through here. I track the bond market. Okay, because mortgage rates are determined by a bond. Okay, so this is basically the basics behind a lot of these things. Now let's now go over and see, where do we think rates are going to go from here? Because that's where we need to figure out. Because if you're looking to refinance, should you do it now? Should you do it now? And even if rates drop in 12 months from now, they're going to drop maybe. Should you do it now and do it again? Maybe you're looking to buy. And in the spring, you're like, okay, is that a good idea? All right, so I'm going to give you a whole bunch of tools today for you to decide, not me, you to decide what you think the market's going to do from here. So let's go down some of the paths that I want to focus in on. Now, I jotted these down, and again, you guys answer this. I was trying to bring up some fancy spreadsheets or whatever. So for interest rates to really go down much further, what do we need? Well, let's also talk about what would cause rates to spike. Okay, so there's going to be two big pieces. Otherwise, the market's just going to stay stable. That's what I'm thinking they're going to do. But let's go over the scenarios that would cause rates to go up or down in a dramatic way. Okay, so the first, we want to look at the economy. How's the economy faring right now? Well, let's get over to here, right through here. The economy right now is growing at a 3.8% pace. That's pretty darn good. They're expecting the GDP to continue over 3%. Even at 2%, we're in a good growth mode on the economy. So if I'm looking at the economy overall, I'm saying, okay, we're not in a bad shape. So are we going to crash? No, I don't think we're going to crash. Are we going to really, go robust? I don't think, because there's huge uncertainty in the markets right now. Okay, so the next piece of this puzzle we want to look at is employment. Okay, where's the employment going right now? Well, it depends if you look at ADP or if you look at some other analysts. So the jobs market right now, based on the data we have so far since the government opened back up, is basically, it's steady and stable as usual. So I'm giving the job market right now stability. I don't see any huge spike in the unemployment rate or any major move on hiring. There people are getting let go, but just not getting absorbed into the market, but it's in a gradual pace. So that market's going to be stable as well, in my opinion. Okay, my next opinion is the inflation rate. So here's two big pieces of the puzzle that just came out. One piece came out today. The rent equivalent, the rents that we have to pay. Let me see if I can pull up an analysis I pulled up right through here. Apartment rents drop further with vacancies at a record high. So here's where this helps, especially if you're a loan officer watching this. You shouldn't be. You should be on Thursday's event. But here's what's happening. Inflation, a big piece of inflation comes from things like this. How much it costs us to live in a home. Okay. Well, over the past year or so, here's what we've seen. And I'm going to do a full report on this at the closing bell. But the national median rent for apartments fell 1%. We're now down 5.2% from the highs that we saw during COVID. So if we look at the inflation rate on the housing piece of this, which is 40% of the PCE, the inflation numbers, it should be flat. It should be zero. Well, the projections in the numbers that they're using is showing housing is up like 7%. It's between 5 and 7% what they're saying. Well, it's not. It's actually zero. Okay. So now another huge piece of this puzzle is, if you watch me on a daily basis, we also track this through here. We track oil. Okay. Oil. Why? Well, this gives us inflation. Okay. Oil's in almost everything. So we had, during COVID, oil prices were about $85, $90 a barrel, teetering on possibly hitting 100. We're at half of that now. well, maybe a little bit more than half, a little bit less than half. But you see what I'm getting at? So now you have energy, huge piece of inflation, and also the housing equivalent rents stagnant. Well, those should hopefully offset tariffs. And now, are tariffs going to be legal or not? That's a whole nother argument. Let's say they are. Well, it looks like the average tariff rate right now is about 15%, and it keeps coming down daily. So if you don't have that dramatic push on inflation on tariffs, and you have a lot of these other pieces or components coming down, I mean, in my opinion, inflation might just be in check. So now we go over to the Fed. So hopefully you guys are following me so far. Let me know what you guys think so far on the economy. Do you think the economy is going to, give me a thumbs down if you think it's going to crash? Do you think we're going in the verge of a recession? So let me know that. On the employment numbers, I want your feedback, because this is, hopefully you guys, you're all over the country and you can give me kind of a bead on what your markets are doing. So I'd love to know that. I live in the Chicagoland area here. I mean, they're building like crazy. Our taxes are nuts, folks. We just had a client came in today, a brand new contract. It was a house, maybe between $250,000, $350,000. Their taxes are like $14,000. So that's what states like Illinois are doing to our homeowners. So not a good thing there. But that's what we're seeing through here. So this is what my expectations are on that part of it. Employment. Let me know what you guys think on employment. Here in Illinois, employment's still pretty darn good. So let me know, please give me a beat on your market. If the employment numbers are up or down, give me an E for employment, and then give me an up or down if you guys wouldn't mind on there. And then the inflation, let me know if you think I'm just crazy off my rocker, or you think, hey, maybe he's got something here. Okay, so now hopefully we bored you to death on all the economics on now. Where do you think rates would go based on this information? Where do you think rates could go? The first thing is probably, I have no idea. So let me just give you two big pieces. And Trump economy only going up. Okay, I'm going to jump right on that because that's kind of where I was going. Let's get on President Trump. You love him, you hate him, it doesn't matter. Let's just talk facts. The fact is, he loves real estate. He loves to win. He loves his ego. He loves all this other stuff. So do you think he's going to want to be in his presidency and have a stock market down, have real estate down? I don't think so. So what's going to cure real estate? Interest rates. What's going to help interest rates? Oh, him pushing the Fed. Where's the Fed going to be in a couple months? Well, we have one Fed official that President Trump just added at a last minute meeting about 2 months ago that's completely on his side. He's got two others that are on his side, and now he has one that just is taking early retirement. President Trump's going to be able to vote a new one in, so he's going to vote another one in. And then the federal chairman Powell, who's the president of the entire Fed, his term is up in May, so President Trump's going to be able to elect the president of the Fed. What do you think rates are going to do next year? Just a thought. Okay, so between all of that, do you think the economy is going to crash or not? So now let's get over to it. If the economy doesn't crash, okay, I think we're going to have steady sailing. I don't think the stock market's it'll be stable. I don't think we're going to go into a recession. These are my thoughts. So let me know your thoughts, folks. So let's see what Miss Marabee has to say for us. I'll put you up on the screen if you don't mind. Let's see. Trump's economy is only going up. It takes time to fix the previous destruction, but he'll do it. Oh, thanks for the comment. I agree. And I'm from West Virginia originally. It's a coal, mining town and state, I guess. Huge steel mills and all that. It was devastating during, when China just took over things and everything. But let's now go over, you now understand what my thoughts are, where rates are going to go. I don't think they're going to plummet anytime soon. I'm having my Q4 of this year plus Q1 of next year. I'm still going to stay stable with my interest rates. My interest rates that I'm expecting is going to be from 5.99 to 6.375. And I'll come in each day and show you guys where the rates are. The national average rate now, Mortgage News Daily, is 6.3. Retail sites are 6.28. So we're about 6.25 to 6.3. So we're right basically where I'm expecting the high end of this. So I'm expecting the Federal Reserve to cut at the next meeting. But how does this affect you guys? So what do you do? Okay, so let's get over this. I'm going to launch 2 new calculators for you guys. These are still in beta tests, so they should be ready fairly soon. The first thing is I want to talk to those out there that are homeowners. So I'm going to post, if you guys want me to run this, let me know, or if you want actually to for us to look at some things for you. I created this tool right over here. So if you're a homeowner, there's a RateWatch 2.0 tag up there. What you're going to do is give me what mortgage rate you'd like to be contacted to look at refinancing. So just plug your information in here. We don't sell it. It'll be me calling you and saying, hey, the rate hit 5.75. Here's what the numbers look like. Let's go over it and see what your savings is going to be. If you want to do that, you'll click right through here. But let's go back through here. Here's what I want you to see. A lot of people, the question we get is, like, if you're even looking to build or buy, what do I do? Do I lock in now? I know it's going to cost me. Well, one of the biggest things that a lot of people don't, really get when they're looking to refinance, they only bought a house one time. They bought their first house. And when they went to that closing, you might have been devastated with those closing costs. You sit here and you're like, okay, the lender is charging me $2,000, $3,000. Now though, this stuff, and there's this title thing I don't have a clue about. That's $7,000, $8,000. And there's this escrow stuff, another $5,000. It was $25,000. Why in the world would I refinance? It doesn't work like that when you refinance. When you refinance, usually we don't have much of a fee at all. You're going to have an appraisal fee, a credit report fee, title fees. We can use any title company you want. So if you have somebody that in the title business, you want to use them, we can use them. And then to set up an escrow, if you're looking at escrow, that's it. So in the average cost, maybe like I'm in Illinois, if you go to refinance, it's pretty much a flat fee on title of $995. So I'm not going to say that's where your state's going to be, but that's a comparable fee throughout the country. So now let's get over to this. And what we're going to do is we're going to plug in this. We're going to say, okay, we have a $400,000 mortgage, and I close this thing. I'll put bad timing. November of 2023, when rates were 7.875. And I know I'm blowing that up a little bit, but let's go with it. How many payments have I made so far? I've made, 23, 24, 20 payments. Okay. So now I can refinance. Dan wants me to put some numbers in this thing. So I think I might be able to refinance it. Today he's saying 6.25 is probably the average. So let's say I refinance today at 6.25. Okay, we'll go down through here. New term, I'll just go to 30 years just because I just closed a year ago. Closing costs, put in here, change this number. Okay, change it to $2,500. Okay, this is going to go up and down a little bit. We'll make sure we let you know. Taxes and insurance, but just leave that for now. Just blank for now. Okay, let's just get a general idea of what your numbers are going to look like. But let's now say, here's that question that you have. I wonder if I wait. Because I know next year at this time, rates are going to be, if I can get 6.25 now, Dan's saying rates are going to be 5.99. I think he's wrong. I think they're going to be 5.875. It's going to go down all the way down to 5.875. And I'll do a 30-year term at that time. And I want to make sure my costs are the same. Okay, so now let's calculate what this looks like. All right, so here's, whoa. Oh, you can't do too many decimals. Let's go 8. And I think the same here. Okay. See, this is why we're in beta testing. So we go back one, and now we calculate it. So here's what the numbers look like. Current principal and interest, $2,902. New one, $2,442. A savings of $459. Refinance, if you waited another year, your payment would be $2,322. Your break-even point would be 5.4 years. Extra interest paid while you waited. So while you waited that year, you paid an extra $30,000 in interest. So you lost actually $5,500 in true savings by waiting for that length of term. You'll really never catch that back up until way down the road. So a lot of people think, okay, I'm just going to wait for lower rates or wait for this. Every day you wait, every month you wait, every payment you wait, you're just throwing away money. Okay, so I don't know if this scenario works for you, but this is a calculator we'll be launching. But again, if you go to the RateWatch tool, plug in your information right through here. This is things we track, and these are actually things we send you back because we do a video. We do a video to each person, just breaking down everything for you, what your costs are going to be, what your break-even point is going to be. If it doesn't make sense, we'll probably be the first one to say it doesn't make any sense. But most of the cases right now, it really does. So now let's get out there. Wonder if you're looking to buy or build. Okay, so what I want you to understand in this one, these are for the people out there looking to buy. Okay, how much can I really afford? We've been working hard on these tools in the background because there's tons of calculators out there, but you sit there and you're like, I have no idea what this is telling me. So what we've done is we just kind of bare bone this down to make it as simple as we can for everybody. So just what you'll do is you'll go in here and you're going to say, okay, my gross income, just grab your W-2. Grab your W-2 from last year, or, if you get your year-end pay stub now, or your salary, like, hey, my salary is $85,000. Okay, that's my salary. Total debts. Well, right now I have a car payment for $400. I have credit cards, minimum payments on everything, let's say is $600. All right, $600. I'm a first-time home buyer. I'm looking to put down 3%. That's all I really need. Interest rate, Dan says today's rate is 6.3. Loan term, 30-year fixed. Property taxes. Now, you're going to have no idea what this is. Go in there, and we want to always estimate high. Okay, we want to estimate high because what I don't want you to do is fill in all these gaps. And then what happens is, you get a comparison over here, and you go out and you start looking at homes, and then the numbers come back and they're completely wrong. Well, these are areas that you're going to miss. Okay, so one of the biggest ones is the tax rate. So go in there and put in 1.5. I can assure you it's probably going to be less than that. Homeowners insurance, put in 1. Okay, again, don't HOA. If you don't have an HOA, don't put anything in. Okay, now you're going to go down through here. Are you eligible for VA benefits? Use more aggressive debt ratios. I don't want any of that. So what would be a comfortable mortgage payment for me in each one of these loan classes based on all these? What would I qualify for? And it goes down through here. On a conventional loan, $285. FHA, $319. VA, $363. So look at a VA. You can get that much more as a veteran. Well, let's see. I'm eligible. So we're going to go through here. And I want a little more aggressive debt ratios. So this was the most conservative approach you can take. So now let's get a little more aggressive to max out what those debt ratios would be. Scroll over here, estimate calculations. Here's what it looks like now. This is maxed out at 45% on the front end. Confused with that? Reach out to us. We'd love to help. But conventional loans, you get qualified for $299,000. FHA, $335. VA, you're almost up to $400,000. Okay, if you're a veteran, fantastic. In USDA, if you need help with any of these, we'll have these tabs in here. You can schedule an appointment with us or actually put in your application. So that's the tools that we want to provide you guys with for all this stuff. So hopefully today, I gave you a little bit of tools, a little more understanding of where rates are going to go from here. So let's just kind of dive into this just in nitty gritty. So you understand when you walk away from here, what should you do? Okay. Homeowners, if you're a homeowner, go plug in your information in our RateWatch tool, call us, email me, just put in the Ask Dan tab. Just email me right now and say, hey, here's my situation. Does this make sense? And give me enough information that I can actually get back with you with a video. So these are the tools that we want to provide you guys. I'll have the calculators probably up there within the next 2 weeks. They're in beta testing. But here's my thoughts, and I'll give you my thoughts on this. If I'm closing within 30 days, I'm locking in. I'm not going to deal with all these ups and downs because, again, we started the show by saying what? Stop me if this isn't you, but every day I'm watching these rates and it's driving me nuts. Well, why else would you be watching my channel? If you're a homeowner, if you're watching my channel, most likely you're looking at mortgage rates every day to hopefully refinance. If you're looking to buy, hopefully we give you some guidance on where, different programs you can qualify for. We can break those down. We have I have over 5,000 videos on our YouTube channel. So let's get to any questions that you guys have. So Miss Maribee, thank you for joining us today. We got another one here from Carlos. I'm currently at V8 6.3. Is it beneficial at this point to refinance? Well, let's do this. Current rates. Let's just run this scenario on here. VA rate right now, let's go with average VA rate is 5.9. Okay, so you're at 6.3. Probably not. But let's go to the calculator and just see. So, well, Carlos, can you give me your loan amount when you took out the loan? And because here's, and I break this down with a lot of clients because a lot of the questions are just like Carlos asked. But let me show you something in here that, a lot of times I'll tell you it doesn't make any sense. I make money when I do your loans, but if it doesn't make sense, I'm the first one that's going to tell you it doesn't make sense. Let's go to a scenario that just might not make sense. You have $100,000 mortgage, and if you do, God bless you. You did close at a terrible time. The rate was 7.8. You made 20 payments. Now you can get 6.25, 30-year fixed, and you can wait here. Let's do these calculations. You'll save $100 a month. It's going to take you 2 years to break even. Is it worth it? I don't know. I've always wanted to break even, especially in this market right now, under a year. Okay, again, if you go back to that waiting calculator, let's say you wanted to wait. Okay, they're going to drop further. They're going to go from, Carlos, you'll be able to get, this was an estimate. Carlos is at 370. So you can understand how all this works. So do you wait? It's going to take even longer to recoup that. Now, you throw another curveball at this. Now you have $1 million loan. Let's see what these numbers look like. So now this one, you're saving $1,100 a month. Your break-even point is 2 months. Which one would you do? Okay, so this is the first one would be one that I would come back and say, it might not really make any sense. Let's wait maybe a little bit longer. This one right here, I'd be like, just do it. Because after 2 months, you're already ahead of the game. So then after that, you do it again and you're ahead of the game as well. You might be thinking, okay, I'm throwing all that money away. Okay, well, let's go back to this. Let's change your loan term. You're saving $1,000 a month. I wonder if we can change your loan term to a 25-year at 5.99. So let's see what these numbers look like. So you're still saving $900 a month. Your break even is 2.8. You're saving a ton of money over the life of the loan. Okay, so I think the calculations come down here. So you might even be able to go to a 20-year term. So you get what I'm saying? So my goal here isn't to just shove you in a 30-year mortgage and say, here's your savings. My goal is a whole financial plan. Okay, so let's bring it down. Are you struggling? You're not struggling? Well, let's do this. Okay, it's the same thing if you're looking to buy a house. Use these calculations. Okay, it'll at least drill down some ideas because, this will tell you, okay, if I'm looking for a conventional loan and I'm looking for 400,000, it ain't going to work. Okay. Even if you look at the most aggressive approaches. So the most important thing is if you're looking to buy here in the next few months, get pre-approved. There's no cost in most cases to do it. If you're looking to build, who are you looking to build with? Is it one of the big builders? Go with them, use their lenders. They'll do a fantastic job and just go down that atmosphere. If you're looking with a local builder, we'd love to help you. We work with local builders all the time to navigate basically their owners because they're usually an acquaintance. They're not big home builders. We want to make sure that transaction goes as smooth as possible. So use this tool right there here, even if you're a realtor, loan officer, or we're going to have this posted out here shortly to you guys just to give you some of those tools. So in the long run, if you guys would, let me know. Carlos, sorry about that. Thank you for the way I'm new to the channel. I absolutely love all the info. Thank you so much. Let's see. Carlos at 6.3. Let's run Carlos's. He's a veteran. So thank you so much. Let's see, $370,000. All right, and Carlos is at 6.3. You did pretty good, my friend. You might be able to get. Let's get over where were rates. I know the rates are a little bit better than this. These are all those advertisements that we went through. VA 5.9. There's no way VA is 5.9. Let's throw in this. Where are we on those calculations? You're at 6.3. Original term. You haven't been there that long because you're at 6.3. So you probably closed last year or recently. You could probably get about 5.62. I don't know if this is going to really make sense for you to do it at this time, but it also depends on what state you're in. Because if you're in a state with really low closing costs, again, it might make sense because the closing cost plays a major role in this. Let's just see what this thing says. It would save you $178 a month. It would take you 14 months to break even. With today's market, I would hold. What I would do is I'd go into our RateWatch tool, plug this in. We know 5.8 doesn't work for you. Put in 5.75, put in 5.5. Put in 5.5. So when the rate hits 5.5, you're going to plug in your information right through here. I'll probably send you a video, a call, a text. We do probably 10, 20 a day. A lot of people don't get back with us. Why? You put in the information and you're saving money. Don't let the costs of this sway you or anything else. Carlos, California, your title fees aren't that bad. And also, if you recently closed, we might be able to go back to the same title company that you used and maybe get you some discounts there. So we can use any title company of your choosing on a lot of these. So let me know your thoughts, Carlos. If you would, do you think? Let me just go with this. What do you think rates are going to go from here? Do you think, based on a lot of the data that the government is looking at right through here, and this is what the markets look at as the same thing? What do you think inflation's going to do? There's no wrong answer. I think inflation's going to stay in check. I don't think we're going to hit a 3 handle. I expected rates to be right about here. If you go back to my old videos, and I always fact check me if you guys would. I hate those people that come out and told you so, but you've been telling me for 7 years the opposite. So check my other videos. You can see I've been pretty darn consistent over the last few years, and we've been pretty darn on the button. Right through here. Back in April, April right here, it was 2.3. I said we're probably going to get about 30 to 40 basis points jump in the PCE because of tariffs, and we got exactly that. I don't think it's going to go much higher from here. Actually, I think it's going to start to turn a little bit, but the tariff legality thing is really what's throwing us. So let me know your thoughts on that. Over through here, the employments. I'd love to know your thoughts out there, especially Carlos, anybody else out there that can give me a beat on what's your job market looking like. Okay, it's been a long time since I had my resume out there, so I'd really love to find out boots on the ground what your job market looks like, and GDP I think is going to stay in line. So I'm not expecting a recession. I'm not expecting massive layoffs, and I'm not expecting massive increase in inflation. Actually, I'm thinking the Fed's going to reduce rates. That's going to help the markets. I still think the markets are a little frothy, not as frothy as they were recently. And if you follow my channel as well on a lot of these things, I've been saying about 2 months ago, I said, start lightening the load in the markets, and please fact check me on this stuff. And if you're a trader, I dollar cost average. I've been recently buying Bitcoin and things like that, but now might be the time to start dipping your toe back in. Bitcoin's up $7,000 today, and the other markets are starting to move as well. So if there's any other questions, let's see. Carlos, what do you got for me, my man? I would hope for them to go down. Yeah, but I'm putting my information in your apps so I can notify. Absolutely. Well, thank you so much. So again, here's my thoughts. If you're on the sideline waiting, rates can go down a little bit more. I don't think there's any massive shock in the system coming. We basically know the Fed's going to cut next week. There's a 90% chance if they don't, that's when you might start seeing, there's some problems here. But I think the Federal Reserve is going to cut. I think the data we're going to get over the next few weeks, some will be a little choppy, some will be okay. Just the markets, don't be a trader on the day. Don't look at the daily interest rates. Oh, I missed it. Oh, I got it. Oh, I missed it. It doesn't work that way. So if you're doing that on a daily basis, or you're a homeowner, use our tools. If you're looking to build, you're looking to buy, reach out to us. Would love to manage you through this whole thing. One of the biggest things is people don't really understand what mortgage program they qualify for. They get a lot of times they get a lesson learned on what credit reports and how credit scores work, and also how your income really works and how all this ties into your loan approval. And then watch. All I can ask you to do is watch every day. Make sure you subscribe down there. So every time I post a video, you get an alert. And every day I'm going to come out and tell you, should you be locking or floating? If you guys would, follow me on X or all the other social media. I'll be posting alerts out there if I think you should lock in. If there's just something in the market that's really shaking the markets, I'll alert everybody saying lock in now. And if you're a broker, that's what I'm suggesting. A realtor, I'd reach out to your broker. If you're a homeowner or home buyer, I'd reach out to us or your other lender to make sure they pay attention to that. Because most cases, you're more than welcome to fact check me and track me. I've been doing pretty darn good. So that is it for today. So if you don't have any other questions for me, that'll do it for the day. So thank you so much. We've been keeping really busy. I will be having the closing bell. There's some interesting stories coming out today. Even though there's no financial news, there's some interesting stories. And let's do one last check of the markets. We have the MBSs. They are up 9 ticks. And just for those old timers out there that have been watching me for a long time, mortgage rates are down 1 tick to 6.3% on the 30-year fixed. So hopefully you learned a little something today about how all this works. If we can help you out,